Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's packed program, I'm going to be covering the main theme of the video. And as per the title of the video, have we now officially fallen into the Bitcoin bear market for the next 12 months or so? So we'll have a deep dive into that question and possibly, and more importantly, what happens next if we have actually fallen into a bear market. So I'm going to be having a look at some of the characteristics of a bear market based on historical context, what the evidence in the chart tells us. And as per usual, I'll have a rundown on the various time frames in terms of what's happened, where we are, and where we're heading in the next few weeks and months. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes. So please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, before I do a deep dive into whether we've now officially fallen into a bear market or not, because the monthly candle was more than likely going to close below the 8 exponential moving average for the close of this month, which was yesterday, I decided to do a poll before that happened, just to gauge some insight in terms of what the opinion is out there. Firstly, I just want to say a very big thank you to the 735 people who actually voted in this particular poll, and it was really asking the questions very simply: is Bitcoin currently in a bull market, or have we entered into a bear market? So after a full week, those who think we're in a bull market is actually 47%, and those that think we're in a bear market is 53%. So in a way, it's very much 50-50 now. At one stage it was around 60-40, and this is entirely understandable because until we have a few more months of price action down the road, we won't really be able to confirm whether we have actually fallen into a bear market. However, when you look at the historical evidence and take away the noise, the emotion, and the biases that people have at any one time in this space, what we can do is to get a very good idea of what's really happening. So I'm going to do the analysis with this in mind, that half the people virtually think we're in a bull market and half think that we're in a bear market. So let's present whatever the evidence is and see what comes out at the end of it. And if you've been in this space for the last one or even two, possibly even three cycles, you'll know that even when we fall into a bear market, we still get these types of articles where people are saying that we're really set up for a very good 2026. But if we're in a bear market, then we're going to have 10 or 12 months of a downturn. So we just have to take an objective and balanced view. And as many people keep referring to in the comments, that we are due for a rate cut, and that possibility or the probability is now up to 87% to come down from 3.75 to 3.5. And of course that would normally be bullish, and we would expect the Bitcoin price to go much higher. And a quick reminder that in October we had a 25 basis points cut, and this is exactly what's followed since then. So a 25 basis points cut in October had an effect that nobody was expecting. We would have expected a much higher price for Bitcoin. So we just have to be a little bit cautious, waiting for a December rate cut, which at the moment would be regarded as just a little bit of hopium. And also many people keep referring to the quantitative easing that's going to start in December as a reason for going into a big bull market rally for a blow off top. But please do consider that this information has been available for over a month now. So that information regarding a potential rate cut as well as quantitative easing starting in December, that information is already available, and the investors have already baked that in the charts. And this is the result of all that. So how has that really played out in terms of the price? And one of the biggest signals that a lot of investors look for within the Bitcoin space, and that is, which is this particular candle close, the monthly candle close yesterday, and its relationship with the blue line here, which is the 8 EMA. So the monthly close below the 8 EMA has been historically a very good signal to mark the end of a bull market and the beginning of a bear market. And of course, nothing is guaranteed in this space. All I'm suggesting is that if you just look at the historical context, and of course this time it's different, there's different players. We've got institutions buying rather than retail buying. We've got interest rates coming down. We've got quantitative easing and the potential of $2,000 checks from the USA government. So all that kind of thing is still giving a lot of hopium that this is what is going to happen. However, if that's the information that I already know and the whole public out there knows, and the question is, with all that positive information and the price instead has come back down, when those potentials actually happen, why would they do this when they're not already doing that with all that information out there in the public domain? And this is why I always say to people that don't listen to what the news tells you, because whatever the news out there are, it's already baked into the price here. Everybody knows there is quantitative easing coming. We all know there's a rate cut on the horizon in December. We all know that there are potential $2,000 checks coming in the post for everybody in the USA. So you just have to ask a question. You don't have to believe it, but you do have to ask the question. You can't ignore it. With all that information out there, why are people not buying? So the reason why this candle is incredibly important and usually marks the beginning of a bear market and the end to the bull market is that as it stands at the moment, whether you believe in an extended cycle or you believe that this time is different because there's different players doing different things and they won't let the market come down, and that's all very good, but let's have a look at the evidence in the chart. When we last fell below this here in the time band, always remember it's always the time band when things happen. If in the time band this is what's happening and in the time band this is what's happening, then the evidence suggests that this will probably lead to a fall in the market to a 10 to 12 month bear market. And if we go further left to the previous cycle, the same thing happened. In the time band of the end of the bull market, the 4-year cycle, once we fell below it, that was the catalyst for a bear market. So that's in the last 2 cycles. And even in the first cycle, which ended in 2013, once we got below that 8 EMA, even though we came back up, we did create a lower high, but that was the catalyst for the bear market. And the question really is, so as per the title of the video, what can we expect the Bitcoin price to do over the next 6 to 12 months? So there are a few common characteristics to consider. So if we go back to the previous cycle, once we fell below the 8 EMA here, you can see that the following 4 candles, if I just put a little box there, you'll see that there's a range-bound price that you can expect. It's not going to be a straightforward that now we've fallen below this, that we're going to just do that. This is not what normally happens. What you normally get is a retest of the 8 EMA. That was the first month after falling out of that 8 EMA range. Then the second month, the third month, and the fourth month. So this is what you'll see as I show you the historical context, that once we do fall below the 8 EMA, there are these common characteristics for the following many months of a retesting of that 8 EMA continuously. So you got it there in 2021. Similarly here in 2018, this particular candle was the one that broke below the 8 EMA. And if you put a little box around that, you'll see that there were several months and even closing above it. So this obviously was a bull trap, but we interacted with this 8 EMA for a number of months before finally breaking down. So after we broke down, we had 1, 2, 3, 4, 5, 6, 7 months of sideways consolidation where repeatedly it kept coming up to retest the 8 EMA. And even back in 2013, when we ended the first 4-year cycle, once we fell below it with this candle, you can see quite clearly for several months, if you look at the range of that particular candle that fell below the 8 EMA, it kept coming up to retest the 8 EMA several times, and once again it actually closed above it. So don't expect, now that it's fallen below the 8 EMA, that it's not going to come back and recapture that one more time, because historically it has done that. But that, as you can see quite clearly, was a bull trap. And on this occasion, it stayed above the 8 EMA on 3 months continuously before falling back down again and ending with a bear market bottom here around 12 months later. So that's one of the common themes with this 8 EMA, that once we fall below it, we can get above it and it's usually a bull trap. And secondly, we're probably going to be retesting it several times over a period of a few months at least. The other theme to notice here, and which is very important, and please remember we only have 3 data points, so that's all we've got. And many people refer to this saying you've only got 3 data points, and in the same breath say that we're going to be running into an extended cycle in 2026, which actually has 0 data points. We don't have any evidence of an extended cycle. And yet 3 data points is not enough while proposing at the same time an extended 4-year cycle. So to me that doesn't really make sense. Another common characteristic to note here, which is very important, if you notice the candle that falls below the 80 MA, if you put a ray at the top of that candle, you can see that in this first cycle, the price didn't get above that candle until the following bull market. If you go back to 2017, this is the candle that fell below the 80 MA after topping out. And if you put a ray at the top of that, you can see quite clearly that the price doesn't get above that until we've bottomed out on a bear market and we get into the next bull market. Similarly, in the last cycle in 2021, when we fell below the 80 MA here, this was the first candle, and when you put a ray at the top of that, it wasn't until February 2024 that we went back above that price. So we didn't have any subsequent candles going above that until we completed the bear market. So on that basis, this monthly candle that closed yesterday, the top of that is at 111,221. So based on that historical evidence of 3 data points, of course we'd love to have 100 data points. We don't. We can only work with what we've got. So based on those 3 data points, we should not now see a price above the 111,000 going anywhere forward. However, as I've just shown you as well, the 80 MA is currently now at 98,000, and in all the previous 3 cycles we have come to retest that 80 MA for several months following the candle that closes below it. So in essence, what we're really trying to say here is that we're more than likely going to be range bound between 80,000 on the lower side here, possibly even getting down to the 74,000, which would make sense, but the range bound is probably going to be between either 74 and 80,000 and interacting with this 80 MA wherever this wants to go. So this is where you would expect some sort of a consolidation pattern in the next 3 to 6 months. So based on the historical context, this is exactly what we should be seeing going forward. But when we look at the weekly time frame, there's another very important pattern that seems to be a common theme once we fall below the 80 MA on the monthly. So this is incredibly important for those people who want to trade in a bear market, and that is going on to the weekly time frame. The 8 EMA, the blue line, after the monthly close of the 8 EMA, the common historical theme seems to be that the 8 EMA then provides a huge amount of resistance all the way down to the bottom of the bear market. Yes, we will see some bull traps along the way where we close above the 8 EMA, but on the whole, what we will get is the rundown and a very strong resistance all along the 8 EMA until we bottom out and we recapture it in the new bull market. So this is what's happened in 2021, and look what happened in 2018. Once we topped out at 20,000, we fell below the 8 EMA on the weekly, and then once again, even though you're going to get your bull traps along the way, for most of the time you'll see that this is an incredible resistance point all the way until you get back into the bull market. And even in the first cycle, once we'd fallen below the 80 MA, yes, we had our bull traps here and here, but for most parts you'll see that we found incredible resistance on the 8 EMA all the way down until we got to the end of the bear market. So you can see that there's a lot of common themes that have been running with certain patterns. So it's not just one candle closing below the 80 MA on the monthly. You can see there's a lot of added patterns and common themes running once this particular candle closes. So as per the title of this video, all we can say is that it looks highly likely. So let's call it 80% to 20% probability that we're more than likely now in a bear market. And while you never want to take anything off the table, and as you know, I'm always open, fluid and flexible, and my cutoff point, as I mentioned in the last many videos now, is that Bitcoin needs to really get above 116. So for me to now change my bearish bias, I would have to see Bitcoin above this level here, 116,000. If we can do that, then it's at that point that I would turn bullish. However, as I've just shown you on the monthly candles, that in the 3 previous data points that we've got, once we close below the 8 EMA, the price hasn't come back to go back above that monthly candle, and that is at 111,221. So that would be a preemptive signal to this 116,000. So it's this green line here at 111,221, that if this price comes back up here, then that would catch my attention. But if the historical perspective is to play out, then it's highly unlikely that we're going to get back to even 111,000. And as I've just shown you with the 8 EMA, the blue line here, on the weekly time frame, this is currently at 97,000. And while we can get a few bull traps that go above the 8 EMA, the chances are, the probability is, we're more than likely going to get repeatedly rejected at the 8 EMA, wherever that is. Currently it's at 97,000, but obviously it's a downward sloping trend line and it's going to go lower further. So we're going to get these price movements into the 8 EMA and on the odd occasion go above it. But the long-term trajectory of the next 10 to 12 months is to the downside. Okay, I'm going to have a rundown on the various time frames to just make head or tail exactly, just to have a detailed look. And firstly, I'm going to start off with the monthly time frame, and that is that now that we've fallen below the 8 EMA on the monthly, we are finding support on the 21 simple moving average, which is the yellow line here. And as I've shown you with the important historical perspective, the following monthly candles are going to interact with the blue line. So don't be surprised if we come back and retest that 8 EMA at the 98,000. And if you look at the RSI, we are just about falling below the 50%. And usually around this level here, we do tend to get a little bit of a bounce. And as you'll see with the analysis on the daily time frame, it seems highly likely that we're going to be consolidating in this range for many weeks coming up. Okay, moving on to the weekly time frame. And as I've been mentioning for several weeks now, that the blue line, the 8 EMA, crossed up below the yellow line, the 21 simple moving average. And since then, you can see quite clearly the price has found resistance on that 8 EMA. And now that we've found some distance between it, the high probability is that in the next week or two, even possibly this week, we're probably going to come back and retest this, either this week, which would take it to around about 97,000, or when it falls further lower down here, and then that would match up with this top around about the 93,000. So now that we've fallen below the 8 EMA, as I've just shown you with that historical context, the higher probability play, whatever your biases are, the evidence in the charts is that the higher probability play is to be coming back and retesting the 8 EMA continuously, with the odd time it's going to get above it as a bull trap. Okay, moving on to the daily time frame and looking at exactly where we are and where we're probably going to be heading in the shorter term. And that is that if you watched my last week's video where I mentioned that there's a lot of resistance going up here, and that the first level here at the 93,000 at the top of these candles, and the 93,000 was one of them here. And as you can see with this candle, you can see quite clearly the shooting star went straight into that 93,000 resistance. And the narrative was really that we're not going to get past the 100,000. This was the highest price that we thought that this is going to get up to. So far anyway, we seem to have reversed at the 93,000. And that makes sense because when you look at this trend line from the recent lower highs that we've been making, so obviously we had this 126,000 top so far, so we made this lower high, then we made this next lower high, and the 93,000 came straight into that trend line here. And the question is, where does it go from here now? So you can see from these levels marked down here, and the private members on this channel will know that I've been giving you these targets here, that the 61.8 is at the 85,000. So whenever this turns around, which it looks like it has done, it's going to come back and cause some sort of a double bottom, possibly at the 85. At the moment, it seems to be finding support at the 86 level, which is the 50% Fibonacci level. So this was the higher probability play that once we topped out, we're going to come back and create this double bottom. And the question is, where is it going to go from there? That's the main thing. However, we do have that April low that we had at 74,000. So if we do break below this 80,000, then the next level will be at 74,000. When you zoom out, you'll see why that's the case. This is the low that we got there. 74 to 76,000 is our next target should we fall below this 80,000 recent low that we had. So on the way back, if we do turn around anywhere around here, then this trend line is going to provide that bit more resistance one more time. However, we are coming to that for the fourth time. So you could see a break above that and then retest that level at the 93,000 one more time. So let's have a look at the 60-day cycle to make head or tail about how the price fits into that template. Okay, so I'm going to just put it into context very quickly, and that is the last two cycles. We had a failed cycle here and another failed cycle here, and the danger now is that we may well have now a third failed cycle coming up. So the low of this candle was 80,537. So if we put a line there, if this price now comes back and closes below the low of this here, then we have another failed cycle, and that gives us a very high probability that we're going to go back down to the 74,000. And so far, if you look at the number of days that we've had to make a high from the start of the cycle, which was on Friday the 21st of November, to the high on Friday, that was day 7. So we've had a day 7 high in this current cycle. And the reason why that's important, we've had a series of very quick highs followed by failed cycles. If you have a look at the last cycle, we had a day 11 and then this happened. And previous to that, we had another day 11 high, and then look what happened after that. We got another failed cycle. So based on the two previous failed cycles, and in both of the previous cycles, as you can see, when we made that day 11 high, then another day 11 high there, the price never went back above that within that cycle. And same here, once we made that high, the price never came back above that price. So based on that particular analysis, of course we can't ignore the possibility that it can quite easily do that. Of course it can. But we now have to think with our bear market cap on that the higher likely high for this cycle, which ends here around the 20th of January, it seems unlikely that we're going to get above that 93,000. That we're more than likely going to be either oscillating in that range up to the 93,000 and possibly to a lower range of 80,000. So this is what I'm seeing now for the price to be oscillating in between this particular range. So in conclusion, the main theme of the video has really been, now that we've got the monthly candle close below the ATMA, and I've shown you through the historical perspective with the various characteristics that we can now expect, because once this happens, there's certain patterns, certain prices, certain moving averages where the price tends to interact with for several months after this. The higher probability now is that we are in a bear market scenario. And of course, it doesn't mean that it can't do this for the first time. We only have 3 data points, but that's all we've got. And on this channel, we're well positioned to take advantage should the price get above the 111,221, which historically it hasn't done so in terms of going above the candle that closes below the ATMA. So it's around about here. Once it gets above here, then we can change the narrative to the upside. And it's always better to remain open, fluid and flexible and not get stubborn and want the price to just play out to the narrative and the biases that you might have. It's better to know exactly what to do, because when the narrative changes, which it would do around the 111,000, then you have to change with it. Until then, as I've shown you with the various patterns historically, the higher probability play is now more for a downturn for several months to come. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and subscribe if you haven't already done so. If you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.